How does student loan forgiveness affect your tax liability? Imagine getting a big chunk of your student loans wiped out and wondering if Uncle Sam will want a piece of that. That's what we're here to figure out today. When your student loans are forgiven, the IRS might see that as income. But it depends on the type of forgiveness and when it happens. Right now, through the end of 2025, most federal student loan forgiveness is not taxed. Thanks to the American Rescue Plan Act of 2021, forgiven student loan debt is temporarily excluded from taxable income. So if your loans are forgiven before January 1, 2026, you generally won't owe federal income tax on that amount. That's good news for many borrowers. However, this exemption is only temporary. Starting in 2026, if your loans are forgiven under income-driven repayment plans, the IRS will treat that forgiven amount as taxable income. That means you might face a big tax bill if you have a remaining balance forgiven after 2025. The IRS considers the forgiven debt as income, so you could owe a significant amount in taxes. Some forgiveness programs are permanently tax-free, no matter what. For example, public service loan forgiveness, which forgives loans after 10 years of qualifying public service work, is always tax-free. The same goes for teacher loan forgiveness and loan discharges due to death, total and permanent disability, or school closure or fraud. These are exceptions that stay tax-free forever. It's also important to remember that federal law currently excludes forgiven student loans from taxes until 2026, but state taxes are different. Some states do not follow the federal exemption, so you might owe state taxes on the forgiven amount. That could surprise you if you're not prepared. When your loans are forgiven, the IRS will send you Form 1099-C, which reports the canceled debt. You need to include this amount on your federal tax return if it's taxable. To stay ahead, keep track of your forgiveness type and timing. Planning ahead can help you save money for potential taxes after 2025. Consulting a tax professional is a smart move, especially if you live in a state that taxes forgiven student loans. Some employers also offer student loan repayment assistance programs, and some of these benefits may be tax-free through 2025. It's worth checking if your employer offers this perk. In summary, most student loan forgiveness will not increase your federal tax bill until 2026. After that, certain types of forgiveness under income-driven plans may be taxed. Some forgiveness programs are always tax-free, but state rules vary. Being aware of these rules can help you plan better and avoid surprises when tax season comes around.